Hey there, good afternoon. This is Trader Tim, eminymine.com, doing a trade recap for the 9th of July, 2020. Today, on the daily chart, markets haven't closed yet, but the pattern that we're seeing is more of a bull flag on the daily chart for the ES. And so when we were selling off today, I was watching for that kind of a V reversal or some kind of sign of reversal throughout the day, just because the up move that we had has gone in such a way where we haven't broke the prior day's low. And then when we did over here, these 2 days kind of mixed signals, being that one was a bearish with a topping tail, one was bullish with a bottom tail. The fact that yes, you could draw up a retracement like this and kind of get the next 50% on the daily chart, but we had already broken the swing high from over here. We already kind of put in this double bottom, so feeling a little bit more bullish, and in that regard, kind of wasn't looking for that full retracement or a retest of the 50%. So watch for, if tomorrow, let's say we close today in some sort of fashion where we're closing off of lows. So if we just sell off into the close and this turns into a big body candle, then this next 50% retracement would come into play. But if we close today, somewhere around here, or even if we close higher, then tomorrow watch for a move above today's high, and especially above this little swing high here, to send us up into kind of this new high territory. I think if we can break above this cluster or this kind of consolidation level, then we should easily be able to take out this one and then push up into the negative 23% target. So that's just kind of the bigger picture view of what I was seeing today. If we go to the intraday chart, you can kind of see that V that we're coming out of. If we draw a full halfway back short, we're kind of sitting right at the short, so we have a little ways to go this afternoon to punch through the 61.8, or at the very least just hold ourselves up off of lows. And if we can do that, then tomorrow I'd watch for that break above today's high. If we just roll over here and move lower, then the next 50% retracement, we'll draw it up on the 512 or on the ES here, would be down at 30.8150. And you can see it looks a little bit more bullish here on the ES chart in the perspective of the higher lows that we've put in versus the SPY chart kind of comes across as more of a double bottom. So what I wanted to talk about today is something that a topic that kind of doesn't get talked about too much, but that's when you're trading a specific setup. In order to get to the winning trades, you have to go through the losing trades. And what I mean by that is you need to essentially take all of the setups that are valid, that meet your criteria, versus exclusively picking and choosing. So when we're trading off the 512 tick chart, there's certainly a level of subjectivity. But when we come to a situation where we're at a resistance level, we break a swing low, as we did today at this nice, the first halfway back short for the day, drawing up that retracement and getting in the trade is not very subjective. It's objective. We've met the criteria of breaking the swing low. We're sitting at the halfway back on a little bit larger time frame of resistance, and then we can just simply draw from highs to lows and draw up that retracement. So, that's the general principle. If you have a setup, and if you write down the criteria on a little note card or a post-it, simplify it, keep it in front of your trading screen. That way you can just reference it really quickly, and then boom, boom, boom. Do I have these criteria met? And then you can place the trade. And the reason this is important is because I know more and more people have been trading right off of the 5-minute chart. Volatility has come down more, and we're able to see the distance between the 50% and the 61.8 shrinking on these 5-minute trades. So I like to use 5 points as my threshold. So if I'm going to enter a trade, I can do it one of two ways. I can let it set up on the 5-minute chart. I can draw up the 50% retracement. You could use a whole number of different tools to determine a support or resistance level. And then you can come over to the 512 tick chart and place your order on that smaller time frame. And then the second way that I'll place trades is directly on the 5-minute chart. And when you're on a larger time frame, if we're talking the first 2 hours of the morning, you're only going to get so many setups that trigger that set up in the morning. And so to get to a winning trade, like we had this morning, where we traded right at the 50%, and then with these larger time frames, I'm really just setting my target at the negative 23, and I'm not doing any kind of micromanagement to trail my stop, just kind of setting my stop initially, in this case for a short, above the 61.8 by a couple of ticks, rounding up and adding a couple ticks. And then for the entry, if you're short, you want to round down and subtract a couple ticks. If you're long, the entry is rounding up and adding a couple ticks. The idea is just to get your order in front of the 50% and behind the 61.8. And then from there, I'm just placing my target a point in front of the negative 23. When you have multiple contracts, you can do things like trail the 5-minute bars. And today it worked out really cleanly, where if you trailed, none of these 3 bars broke the prior candle's high. So you can just keep your stop above each candle and then trail it. And today was a really nice one where it sold off for most of the morning. But in order to get to a pretty, what I would call kind of a home run winner like we had today, you have to be able to take a trade like yesterday, where you're drawing up the same process. In this case, though, it's a long, placing the order a couple ticks in front of the 50, placing the stop a couple ticks behind the 61.8. But in this case, it's a stop out. And it's not a big deal in the big picture when you have 100 trades and let's say you only have a 40% win rate. Well, okay, if we just kind of do some quick math, 48 to 51, we add a point or so for putting a couple ticks in front of the 50 and putting my stop a couple ticks behind the 50. So we'll just call it a 4-point stop. Okay, so 4-point stop out. Then you come over to today and you look at today's setup and you go, okay, well, we got a 61. We'll just call it a 61 down to a 51. And so we're at 10 points. So you've got a 4-point stop out yesterday, a 10-point gain today, and that's not even factoring in, if you were to have a second contract. Okay, yeah, your 4-point stop yesterday turns into an 8-point stop, but then today your 10-point target with one contract, if you're going to trail the second one, you could come away with 20 points on that second one or more, 20, 30, 40 points sometimes when things really get running. So you can get away with a smaller win rate in situations like this where you have pretty sizable winners like 2, 3, 4, not really 2R, but 3, 4, or 5R, or 5, 3, 4, 5 times your stop size are your winners. You can get away with a little bit smaller win rate. You just have to be able to weather fewer trades, so less frequent setups, and situations where you might only have one trade on the day. Like yesterday, we set up in that long, and then when it broke, we didn't really set up in a short in that first hour and a half or 2 hours. I like to go to about 2 hours after the bell. So we didn't really set up in another trade, so you just end up with that one 50%. So if you're gonna run like the entries on the 5 minute as one strategy, and then entries on the 512 as a second strategy, what you can do is go over to the you can utilize the main ES, and you can utilize the micro ES. So you could take 5 minute plays on, say, the micro. Your stop's going to be a little bit bigger, but your risk is so small in the micro contract. And then you could also take the micro setups on the 512 tick chart on the main ES. If you want to trade both, you could just pick one or the other. But just remember that, okay, if you're trading on the micro, you're going to have more setups, more trades. The spread between your stop and your winners will be a little bit smaller, like your R multiple is going to be a little smaller, but you're going to have more frequency of trades, so your win rate is going to be higher. So those are a couple important things to think about: your R multiple, your expectancy of your average trade, and then your frequency of your trades. So Tuesday was another one where it had a nice long setup, traded up to its negative 23% target. Nice sizable gain there. And then the second one, it was just after that 2 hour mark, but let's say you went ahead and took it anyways. I mean, you're talking a 58 up to a 73. So another 10 plus winner. And then, if you take a 3 or so point loser, you're really coming out ahead when you look at the bigger picture. But if you just get stuck on one day at a time, it can really cloud those bigger perspective of the expectancy, R multiple, that bigger data set. So keep your eyes on the bigger picture. Keep a log of all your trades. Just day by day, you can separate winners and losers into two different columns just so you can see the spread a little bit easier. At least that's what I like to do. And you can just go through and keep logging your trades, and that way, if you have a couple of losers, you can kind of step back and say, okay, well, it really doesn't affect my overall winning percentage or expectancy or losing percentage that much, and it can kind of help keep you rolling and keep your momentum going, because there's nothing worse than kind of getting in that downward spiral and starting to make some mistakes and get in your head, and then all of a sudden have a bad week or a bad month. So hope you found some good nuggets with that, the idea of kind of looking at taking all of the trades that really meet your criteria within your trading time frame. So if you're talking the first 2 hours of the day, then try and take all the trades that set up that meet your criteria. I hope everyone has a great weekend, and we will talk to you all next week. Thanks. Take care.